Charles Forelle is with us. Charles, how are you today?
I'm pretty good. Good morning.
All right, good morning. Listen, break down for us this Spanish bond auction. What happened? What does it mean?
Okay, we'll start with the second question first. It is not good, is what it means. Essentially, Spain had a bond auction. It sold some debt and maturities ranging from about 3 years to about 8 years from now. The upshot of it was they sold a lot less than they had hoped to. Their range for the auction was between 2.5 and 3.5 billion euros, and they sold 2.6 billion euros. They paid higher yields as well. That's also not good. But the real story here is that the enormous flood into Spanish government debt at the beginning of the year, largely on the backs of Spanish banks, has slowed. They're unable to attract these huge gangbuster sales that they were able to do earlier in the year, and that does not portend good things for the future.
Yeah, you know, those pictures look very beautiful, Bob, by the way.
Yeah, it does look lovely.
That raises a question for me. I know a lot of that money, we had these great bond auctions right at the beginning of the year. A lot of that money we know came from the ECB. You're talking about these 3-year loans, right, Charles? I mean, has that money dried up already? Is that what we're seeing here?
Well, you know, in part there's a little bit of that, but broadly, more so than that the money came from the ECB, the issue was that the money came from the Spanish banks. So the Spanish banks obviously borrowed heavily from the ECB in order to fund their purchases of government debt. But the rise in Spanish bank lending to the government was enormous in the first couple of months of this year, and it's just entirely fallen off. I think the Spanish banks' holdings of government debt went up almost, I want to say, almost about 40% in the first couple months of the year, and it appears that there isn't that level of demand anymore.
Well, Charles, is this simply a lack of liquidity on the part of some of these Spanish banks, or has their opinion of the creditworthiness of the Spanish government actually, you know, kind of reversed from the earlier this year?
There's probably a mix of both of those things. First of all, this is the Easter week. Lucky Europeans, we get plenty of time off for Easter. In Spain, they have Thursday, Friday, and Monday off. So there are undoubtedly some people in the markets who thought, man, why not take Wednesday off as well? So there's definitely a sort of an Easter effect, a sort of minor technical issue. But also, you know, the banks had borrowed a lot from the ECB at these 3-year liquidity auctions, and you know, maybe they're not ready to put more of it to work. It's also definitely true that this is a verdict on Spain's government budget plan, which just came out recently. So there's a mix of all of these things, and none of the indicators really point in the right direction. It explains a lot of why European markets are flashing red today.
And of course, the larger picture here is you're talking about a Spanish economy that is basically in tatters. Unemployment is ridiculous. Housing market is busted, and higher bond yields just put more pressure on the government,
on the whole
which already
process
is under so much pressure.
Yep.
That's the deal there.